Hi, my name's Barb Culver, and I am the president of Resonate Inc. in Cincinnati, Ohio. We are a financial planning and wealth advisory firm, and one of the things that I've learned over the years that many clients need or find helpful in the way of information regarding investing is information about what questions should I ask myself before I make a particular investment decision. So I'd like to share with you today what we have found to be some very key and helpful questions that you can ask yourself in the investment decision-making process. First of all, ask yourself why you are investing this particular amount of money. What you're wanting to do here is to determine the purpose of this particular amount of money regarding its outcome. So for example, are you investing because you need more income? Are you investing for the long term? If you're investing for the long term, do you want to be more or less aggressive with your growth investing? So you ask yourself, what is the purpose of the investment? Am I trying to get income? Am I trying to get growth? Am I trying to get tax deferral? Am I trying to get tax-free income? Or perhaps maybe you're trying to create a portfolio that has a balance in it between both equities or stocks and fixed income or bonds. Another question you want to ask yourself is, how long can this money stay invested? That will help you and your advisor determine which types of investments are appropriate and which types of investments should not be considered to reach your particular objective. Be sure to ask yourself how much risk you're willing to take with each investment that you make. Now, there are many types of risk, but the type of risk I'm referring to here primarily is what we call market risk. And market risk has to do with basically how much money we're willing to lose on any particular investment. So you can define this either in terms of a dollar amount or a percentage. So let's say, for example, that you want to invest $50,000 in a particular either mutual fund or exchange traded fund or portfolio that contains both of those. And let's say you're investing for the long term, that you have 10 years or more that this money can grow. Let's assume that you say, well, I realize I've got time on my side and I realize that growth investments go up and down, so I'm willing to risk 20% of my investment. You could either say then, I'm willing to risk $10,000 and the $50,000 could go as low as $40,000 before I decide to do something about it. Or you could simply say, I'm willing to risk this 20%. It's very important for you to determine how much you're willing to risk, because that helps you and the advisor understand when to sell. And that's the last question. Once you determine how much you're willing to risk, then you also want to think about, well, when do I want to sell? What are the reasons that would cause me to sell this position? Because one of the things that happens oftentimes is once people make an investment, they don't know how to get out of it, or they don't know what the triggers are or what the reasons are for them to sell. So if you set your amount that you're willing to lose or risk initially, that's one way that you know when to sell. And then a couple of other reasons are, if your initial reason for making the investment no longer exists, then you would want to sell. Or maybe you've reached the goal that you originally set. And that goal could be a time horizon goal that you wanted to invest for a certain amount of time, and that time has elapsed, and so it's now time to sell and perhaps reposition that money, or maybe take it out and use it for part of your cash flow. Maybe you were saving to buy a new car, and you were saving over 3 years, you reached your goal, you took your money out and you bought your new car. So timing is one reason that you might sell. Change of objective is another reason you might sell. Having reached your loss limit is another reason you might sell. And finally, there's performance. So once you make the decision about where you want to invest, it's a very good idea to continuously monitor that particular investment to make sure that it is performing well when it's measured against either other investments like it and or what's called its benchmark. So if the particular investment that you and your advisor chose isn't doing well from a performance perspective, that of course is also another reason to sell. These are the questions that we found are very helpful to help clients make good decisions, sound decisions, decisions that they sleep well with at night regarding their investment portfolios. I hope they're helpful to you as well. Thanks for watching.